Hi, and welcome to Montaka's second quarter 2022 investor video. We understand that the last 6 months have been very difficult for investors. In times like these, it's easy to question the logic of equity investments at all. So I want to take this opportunity to remind investors that equity markets work very, very well over long periods of time. Negative returns, however, are almost as likely as positive returns over shorter periods. And the remedy to any short-term pain then is taking a genuinely long-term perspective and putting in place a structure that enables investors to stay the course through periods of stock price drawdowns to go on and reap great rewards in the future. In June, global equities largely continued their declines, and it rounded out a very painful first half of calendar 2022. In fact, the worst fall in more than 50 years for a calendar first half. And there are several factors that contributed to these stock price declines, including the onset of monetary tightening in many of the major economies around the world. Monetary tightening is the logical policy response to the very high rates of inflation we've been seeing all around the world, particularly in energy and food, which have intensified with Russia's invasion of Ukraine. But in taming inflation, central banks may also inadvertently trigger a recession, and that's been a worry for markets. Other reasons for stock price falls are more technical in nature. They include, for example, equity fund redemptions that result in indiscriminate selling of stocks and add to the downward pressure on prices. Then, in seeking to protect against these price declines, many hedge funds have significantly reduced their gross and their net exposures, and that's exacerbated the selling pressure. Now, these dynamics are interesting to observe and to understand, but they'll all prove to be temporary and largely irrelevant to the long-term focused investor. Moreover, the direction of aggregate equity indices over the coming weeks or months or even quarters is not particularly predictable, nor is it important to us. Instead, we remain laser focused on the select, excellent businesses that we own on behalf of our clients, while also evaluating new opportunities for portfolio inclusion. In contrast to the short-term falling stock prices, the businesses in our portfolio have continued to grow their long-term earnings power and their business values. We're also continually analysing and assessing new potential investment opportunities. And while we're seeing an increasing number of high-quality businesses that are clearly undervalued, the threshold for inclusion in Montaka's portfolio has risen too. See, lower stock prices for the companies that we already hold mean lower risk and greater upside potential. So said another way, this is probably the greatest opportunity to invest into Montaka's portfolio in our firm's history. In fact, our principals and our partners have taken advantage of this year's stock price weakness to add to their investments in our funds too. The investment opportunity that exists in Amazon today is an excellent example of the opportunities in our portfolio. See, Amazon's stock price is down by nearly half this year, but zooming out and considering Amazon's earnings power years into the future makes today's earnings, which are being impacted by the economic uncertainty, look like a mere blip. So while economic cycles ebb and flow, Amazon's long-term growth is structural in nature. Amazon.com leads the ongoing shift to e-commerce, and Amazon Web Services is leading the digital transformation of the Western world to the cloud. At Amazon's current share price, though, this is being completely underappreciated by the market. And we elaborate on the amazing investment opportunity that we're seeing in Amazon in our latest case study. And you can easily access this by visiting montaka.com/blogs. And we'll also add the link in the description box below. Now, before wrapping up, I want to take this opportunity to thank you for your patience and your partnership. We understand the first half of 2022 has been a difficult time for investment returns, but we're confident in the upside in Montaka's portfolio today and in the superior compound returns that we see ahead. So for insights and updates from our research team, please continue reading the Montaka Monocle, which you should be finding in your inbox each month. Reach out to us if you don't see it, or you can go and subscribe to it on our website.